September 7th. I'm Jane Johnston with the Briar Hill Group at Remax Most, and I'm here with...
Everybody, it's Andrew Plank here with Royal LePage and the Vibe Real Estate Group.
Yo, how you vibing, bro?
We're vibing just fine. How you feeling the vibe?
I'm feeling the vibe. I'm having trouble
Excellent.
sleeping for some reason, so I'm not feeling that vibe, but...
I had a conversation I was dropping my car off for a little service this morning, and the receptionist behind the desk was like, "How's your day going?" And I said, "Oh, a little tired." "Oh, why not? Oh, some weird dreams and blah, blah, blah." "Oh, what were your dreams about?" Like, I was getting...
That's weird.
I know. But yeah, no, I'm feeling a little bit dopey today.
Well, I've been getting up early to row at 5 a.m., 5:30.
Yes.
And I've been getting up at 10 to 5, and I'm having trouble adjusting my schedule to go to bed early.
Yeah.
Last night, 8:30, I was on a call. I said, I gotta go. And then I just caught my second wind. It's weird.
Yeah, sometimes the brain turns back on, especially when you start thinking about what you have to do the next day. I have a hard time turning the brain off, so I'm more of a late night person than an early morning person. Although, part of me is jealous of all the early morning people who see the sunrise and get up and just get their day started, wonderfully. I can't turn off. Other people are in bed by 9, I don't.
Well, when I row at 7,
Everyone, comment on your own sleep patterns. Let us know, are you a morning person or an evening person?
Okay, let's get down to business, because I'm sure people are wondering, what the heck is happening with
Now, let's see what happened in August.
Okay, let's go. There we go. All righty. So it is September 7th. We're doing the Victoria Monthly Market Real Estate Update, and we're going to be looking at, first of all, the Bank of Canada. So the overnight rate is being held at 5%. The bank rate is at 5.25%, and the deposit rate's at 5%. And
tell everyone what that all means.
I don't know what it means. I actually looked it up. It has to do with the overnight rate, I think, is what we're really looking at. But so it to me, I think the damage is already done.
You think?
And so they talk about people going to renew their mortgages and how their interest rates are going to double. They're talking about fixed term mortgages. Many people are on variable rate mortgages, so they've already been feeling the pinch. It's been a rough year and a half.
Yeah. That pinch, though, you say the damage has already been done, but it can be death of a thousand cuts, or at least a long, slow bleed, I guess, because, we're feeling it, and both are fairly good income earners, myself and my partner, but we're really feeling the increase in the interest rates. And I can just imagine some people are living more paycheck to paycheck, and their credit cards debt is building up, and they're just hoping and waiting for interest rates to come down so they can start getting ahead of it. But at some point, I kind of imagine that some people will have a point where they snap and say, I can't do this any longer. Even if interest rates don't go down, is what I'm saying.
It's interesting because I was speaking with somebody who, first of all, had a portable mortgage. And they were actually just going to get out of the market, and they're going to be renting for the next few years. But when I was selling the property, we also were talking about people could assume the mortgage. So when you assume the mortgage, you have to actually meet all the identical terms in the original mortgage, and it's not that hard. And the interest rate, I think, was 1.75 or something. And it would have been so great for the buyer to be able to assume the mortgage, but the bank makes it a little difficult because this is what they're getting if they assume the mortgage. This is what they're getting if they
their profit more. Yeah, they're definitely not motivated to take on a smaller interest rate than, well, it's what they've already committed to with that one client. But in order to transfer it to the next, I guess you have to qualify, but they probably do have some extra stipulations. So what was the problem there? What were the hurdles?
The hurdle is you need to have the exact amount of money to take over the mortgage to match it exactly.
So in
And
other words, right. So in other words, if you were planning to buy a place for $1 million and the seller has a mortgage of $400,000 on it, you need to come up with 6, or no, you do two mortgages. You do a blend, right?
yeah, but they're looking at what your total debt service ratio is and all of that. Like, it
Hmm.
wasn't easy.
Okay. Okay. Well, good to know, folks. Because we're in that environment where I remember when we first got licensed, first few years of licensing, and when I was looking for a home, even before we were licensed, Jane and I both were licensed at the same time back in 2006. Um, Interest rates were higher and they'd gone up, so there were people advertising, you know, you can take over this mortgage at a lower percentage, and that was attractive. And part of our licensing, actually, which we never actually get into anymore, but there was a lot of mortgage calculations around what is the value over time of a mortgage at, for example, 5% versus 10%. What does it actually cost you at the end of the day? Um, and it can be pretty obviously it's a significant difference.
Yeah.
So you can calculate that into your actual offer prices.
Hey, Mike Heinrich, thank you for liking our comments. One thing that they talk about in the US is buying down the rate, and which is a great idea. So if you have the opportunity, you can buy down the rate and then you can pay less money over time, which is exactly what you're talking about. So
Mhm.
let's say you get a price reduction of 15,000, you can actually buy down the rate with that 15,000 instead of doing the price reduction. You can't do that here.
No,
But
interesting.
the other thing is I'm finding because of the high interest rate, people who are in fixed rate mortgages do not want to sell. They're hanging on for dear life for the next 2 or 3 years, depending on when they opted in. And
Mhm.
so they're in a really good position. They know what they're not gonna. They know if they move, they might not be able to port their mortgage. So
Always
that's
worth looking into and talk to you if you are thinking of a move and you've got a mortgage. You want to talk to your mortgage lender. Want to look at your mortgage terms on your existing mortgage and determine what is possible for you. There's a lot of options. Don't let us talk you out of it, but you should actually go into it definitely well informed.
well informed, exactly. All right, so let's look at the last 7 days here. Do you want to
Yep.
go?
Sure. Oh, this is interesting because this looks. Oh, I guess you'd sent me September 5th in the email. It was
Okay.
different. Yeah. Okay. So, new listings as of September 7th, 2023, in the last 7 days, 263. Compare that to 257 in the 7 days prior to that. So pretty close, actually. Pending properties, 102 went pending in the last 7 days. Keep in mind, it was a long weekend within that span, and we do find that business tends to be a little slower. People are kind of doing their holiday things. It's the back to school. So it's not surprising to see less pendings at this time. 102 went pending versus 150 the week before. Price decreases are at 83 versus 91 the week before. Price increases 4 and 3. A couple properties back to market. Yeah, and then also in terms of actual solds, usually we see in that week over the span between the 2 months, you see a lot more properties in that sold number. So it's interesting, I guess, possibly because of the long weekend again. Maybe it was pushed beyond. So we had quite an equal amount of solds, 241 in the last 7 days versus 260. 82 properties expired. Again, some people expire their properties end of the month or beginning of the month. 82 properties expired in the last 7 days versus 32. I think people are probably thinking of relaunching for the fall market.
And some are taking them off and waiting for spring
Mm-hmm.
because they're not in a hurry to sell. So I've had a few people on the buying end uh, tell me
That's
that.
Yeah, that's always a hard one because we don't know where the market will be come spring. Invariably the market goes up versus where it was in the winter. Um, But if you're already in kind of a downward spiral, the up is not going to be enough of an up. You're going to still be down over where you are now. So I know you're shaking your head like, does that make sense? But
You
you
can
know,
only go with what you know right now.
if you're swimming with the current, I'm not. I'm going to. Yeah, you can only go with what you know right now, and we could be lower in the spring
Yeah. I
than
just
what
want
we're
to say
seeing with the
regarding
interest.
the solds, so people, because it is a long weekend, people are always trying to adjust, and if they're in a rental, they're going to try and get in before the end of the month. But in September, often people are trying to move to get their kids into a new school, and so they're trying to get occupancy so that when their kids can start their new school in their new place. So
Mhm.
bit of a strange thing. Okay. Okay, we're looking at months to date statistics. So net unconditional sales for September 5th is 43. This is because we get our stats from the board every Monday. This week it was on Tuesday.
Hmm.
So that's quite a lot when you consider only that's 10 a day. And net unconditional sales for September 2022 were 410. And in August 2023, they were 451. So we're at 1/10 of the way. It seems slow. And
Yeah.
I think other agents have commented to me that it also seems slow. New listings are at 104 so far for September 5th, and that's compared to 1,155 for September of 2022. And that was when we were seeing listings increase. We're going to talk about that soon. And compared to 958 for August of 2023. And active listings were at 2,449, and that's compared to 2,300 for September of 2022 and 2,504 for August. So we're down a bit in listings, about 20%. No, yeah,
50 listings, just
yeah.
under 50 listings. Yeah, that's interesting actually to see. And that's not necessarily from sales because remember that we saw a number of properties expired as well.
Hmm.
Um, so that could be, it's both the listings that are selling and the properties that are expiring or coming off market that are affecting these numbers.
Right. And I did just expire and relist a property at a new price. So
Hmm. Hmm. Yeah.
okay, total active listings. You know what? I'm going to change the display on this, and I'm going to make it a
Go a
bit
little
larger
harder. Let's do it.
here.
Yeah. People don't need to see our ugly mugs.
Alrighty. Okay, total active listings. About 2 years ago, we were around 10, 1,100 listings. We dropped down to almost zero, I remember, in December 2021.
Hmm.
We then rapidly increased over the year and peaked in September 2022 last year, and we have been up above that amount since basically June of this year. So we are almost at 2,450 right now.
Yep.
All righty, go ahead.
Right. So we've got two sets of information here. The line is the sales per month, and the column is the actual listings coming on in that same month. When we talk about the list to sales ratio, it's going to be the ratio between those two. And so you can see here in some months, for example, December 2021, we actually had more sales than we had listings coming on. And we like to kind of look at what's happening between these two numbers or whether or not there's sort of a leading indicator, one versus the other. We can see here for 2023, the listings, the sales were ramping up through to a peak in May of 2023 and then started to fall off and have been falling off ever since. The actual number of listings coming on kind of didn't, there were less of a clear pattern, but obviously they peaked also in May and have also been falling off. But there's it's about even in terms of listings versus sales. Maybe you're looking at between 50% to 60% more listings than there are sales.
Yeah, and so I think last year what sort of followed a normal pattern with the new listings coming up and then the sales. Of course, you can see March is a good time to list because your list to sale ratio is quite good.
Mhm.
And then this year, though, it felt to me like the market kind of stalled for the first few months, and then it picked up, and we had a bit of a rally in May, which is normal, but it wasn't the same volume as we normally get.
No. Yeah, and anecdotally, been talking to some colleagues and busy colleagues saying, "Oh, it's been a slow summer. It's been a slow summer." It's interesting because for me, it hasn't been that slow, but that being said, it hasn't been super super busy either. So
Yeah, it's kind of like when you stop off one of those roundabout things in the
mhm,
and all of a sudden you feel like you're going way slower, but maybe you're going normal.
right.
Okay, and what Andrew was talking about, the list to sale ratio. So you can see we peaked in February 2022 with 120%. So for every 10 listings, 12 were selling. We're now in more of a balanced market where for every listing, 3 are selling. And we're probably heading, I think, to a bit of a buyer's market. And
Mhm.
that will happen more
As we
uh,
get closer to 6 months inventory, probably. Um, Currently, I think we're still at around, I don't know, 3 months inventory, which would make sense. If we're at about 30% list to sale ratio, then if we just stopped selling properties right now and just continued on to sell off the existing properties, and based on the amount selling per month, it would take 3 months to sell the entire inventory. Assuming people are going to pay, like, obviously some of these properties are not selling because they're perhaps overpriced or what have you. But if this trend were to continue, we'd have a 3 month inventory. Once we
yeah.
get to about 6 months inventory, we're going to be more into a buyer's market.
Yeah, so the ratio we're looking at is 20 to 30% is balanced market, and under 20 is a buyer's market, which I never really understood. But anyway, doesn't make sense to me.
Well, we feel the market differently when we're actually in it.
Yeah,
So the stats claim that, but we also notice when buyers seem to be getting their way and when sellers seem to be getting their way, and a lot of it has to do with consumer sentiment
yeah.
and less to do with. I mean, the numbers will reflect things after the fact.
The thing that I found is I call them petulant buyers when they start demanding all this excess stuff.
Hmm.
And then you have the petulant sellers, and that's when they are demanding, you know, we want offers on this certain date, and we want this date. And we're getting to a market now where you're going to find that you can't really. We're trying to feel everybody out, and I would say we are really sitting on a pulse. That's what being in real estate's like.
Yeah, so you can have an overall market, but you can have micro times of, there's a shock to the system. Some news item comes out and people take a pause. And in that moment, somebody lists a really wonderful home, but nobody's coming to the table because there's just this brief pause. Somebody swoops in and buys it because they didn't react to that. And they got that better opportunity. And then the next week, things are back to normal, and that property would have gone to multiple offers.
And I like to think of it. It's relative to when you list the property as well. So if you have like we've gotten a few deals for our clients when they've been listed on the weekend of a snowstorm or a long weekend, where we just kind of swoop in. Is exactly what you said.
Yeah, I find holidays, like long weekends, do it. If any change in the weather where we've had a significant, whatever it's been, if it's been sunny for a long time and suddenly we've got it raining, if it's been raining for a long time and it's suddenly a sunny day, whatever reason, people get distracted and just don't, their eyes are not on that prize.
Yeah. Okay. So single family homes. Go ahead.
What should we say here? We can talk back to 2 years ago, August 2021, the average price, this is average price, yes, of a single family home was about 1,225,000. Moved up to a peak in April of 2022 and just under 1.45 million. And then dropped again from that period, from April peak down to sort of the July 2022, and then stuck around, slow up and down, slow rise up over time, still kind of staying on that same path. Here to slightly higher than it was in the low there. Low would have been November 2022 at around, what is that? Just under 1.2 million, maybe 1.175. And we're currently sitting closer to 1.35 million for an average single family home in the Greater Victoria area.
Yeah, so I think the trend over the past year is just showing a slow rise in the price of single family homes
Yeah,
after a dip.
yeah.
Yeah.
And this is despite the higher interest rates and despite, trying to slow the economy and so forth. And people are saying, well, this can't continue, this can't continue. And that's possible. It's entirely possible that it can't continue. But throughout my career, I have seen many people say this can't continue and I'm going to wait. And they wait, and then this number goes up and up and up. And then they are no longer able to afford to buy. So,
Where I'm seeing this, the lag happening in real estate is more new construction on the West Shore.
mhm,
It feels to me like the inventory is kind of stuck, and sellers are asking a lot of money for properties without a lot of land, without a lot of privacy. Um, and they have a big house, but parking is an issue. So all these new developments, I'm thinking West Hills and South Point and a bit
mhm.
of Bear Mountain, Lower Bear Mountain, that there's a lot of congestion in there, and so those houses are having trouble selling, finding just from working with buyers in
Yeah.
there.
Okay.
Okay. Condo apartments, 2 years ago, we were at 550. We peaked in January of 2022. And, we talked about the rebound that happened in COVID. So condos especially took a hit because the
Yeah.
proximity of living close to one another, and then it lagged coming back up. It feels to me like it's been fairly steady, although we're coming down. And again, I'm noticing this: the higher end condos, the 2 bedroom condos are doing well. The 1 bedroom condos have been kind of sucking a bit.
Sucking.
Sucking gas, as my
Okay.
dad would say.
Okay.
Yeah, they're like, uh, a part of the issue with the condos right now is, and it's going to continue, is the lack of parking. So condos, newer construction condos, I think the ratio in Victoria is going to be around 50% for parking
Mhm.
for
Yeah.
units. So that will affect resale value. So if you can find a condo with parking, bonus, because I think it's going to bump up your price over time.
Yeah, it's funny how, from a green perspective, the idea and the movement and the hope is, I guess, that we get more green and less reliant on cars and so on in the future. But I don't see that happening anytime soon. And still, many, many people um, require a car, sometimes two. And so you've got a young couple, both income earners, trying to afford and buy a 1 bedroom in Den or 2 bedroom condo downtown. They're going to have to share a vehicle. And if there's no parking at all, it's just almost impossible for them to buy that unit. So it's definitely a different kind of lifestyle that buys that kind of unit. And it's almost like developers are choosing to develop because they're getting approved for these developments where they may not have been, to construct something where they don't have to add all that parking, and then they're not just building something they're not getting paid for in a sense. So from their perspective, it's good, but it also affects their ability to sell these units.
Yeah. Well, the best thing that they did was put a grocery store downtown,
Yeah,
because before that
they did.
it just wasn't practical.
Yeah,
What?
it's helpful to have all your amenities within walking distance, and that's what
Yeah.
regardless of downtown or condos or townhouses or single family homes, we work with a lot of people who are looking for a village or amenities they can just walk to for their daily needs. Um, and those areas tend to get a premium because although there are some communities that are entirely car dependent, like Happy Valley is very car dependent. Much of Bear Mountain is quite car dependent. People do prefer to be somewhere they can walk.
Yeah. Yeah. I mean, I live in the country, and it's
You're car
brutal.
dependent, but you also get, you could forage.
With all that time I have. I could probably shoot a bow and arrow and hit a deer.
Okay, there you
And
go.
maybe some quail and some rabbits, but
Yeah.
it's pretty dry out here. Not much to forage on except blackberries.
Okay.
Okay, row townhouses.
Road townhouses, yeah. So as we say, this one is usually more jagged. So we have to kind of blur our eyes and squint them and try to see the angles and you can see that this is essentially, although it's more jagged and looks like a back of a dragon or stegosaurus or something. You've got, it looks like a kid's drawing, doesn't it? I don't know.
Yeah, I would say if
I
I
just
were to
put a
look at
couple googly eyes under it and you're set.
the trend over time is we've settled around 825
Yeah.
for townhomes. And there are some projects that are townhouse projects, and I do find that they've gone from lower end housing, like around Spencer Road area, to more high end, like Arise and like the Fairfield developments and stuff like that, where they're more higher quality. And but
Yeah.
there's sub like the ones on Dieppe, which are not Dieppe. They're off High Quadra, and they've been sitting around for a long time because there's issues between the builder and the developer, and whether or not the builder is getting paid. So this is going to be an issue. Cash flow is going to be an issue coming up.
In the future, yeah, for sure. Costs of construction are definitely hitting everyone. Time delays, costs of construction. There's a lot of construction companies out there that need to continue doing business. And they need to have, projects going in order to continue to pay their crews and so forth. And if there's no profit in it, then that makes it really, really hard to stay in business.
Yeah, and just
That's
right
smaller
now,
companies.
the cost of carrying the development over time
Mhm.
with those delays can just ruin somebody.
Yep, yep, for sure.
Okay, so I like this one. I'll go
It's growing on me. It's growing on me, Jane.
Okay, so we're going to look at the home price index. This is the benchmark price for an ideal home. I'm putting air quotes up there for single family home. We're going to look at Greater Victoria. This is interesting because for August and July, we have the exact same number of $1,178,400.
Mhm, mhm.
And that's compared to July of 2023 with the same number. August of 2022 was 1,188,400.
Oh, pretty
So
close. Not
yes,
far off.
0.8% down over year. Single family homes in the core were at 1,323,900. That is just up from the July of 1,318,000, and it is pretty much even with last year of 1,327,700,
Right.
up just 0.3%. And West Shore, so if you're looking for a deal, go to the West Shore at 1,048,300 for August 2023. That's compared to 1,065,200 in July of 2023, and that's almost even with last year at 1,045,100 and up just 0.3% year over year. And then in the peninsula, we're finding big homes on bigger lots there. They're listed at 1,275,700. That is just up from benchmark of 2020, July of 2023 of 1,261,200. And it is almost even with August 2022 of 1,271,800. So this is very interesting to me how even it is year over year.
Yeah.
Because last year in August, we were really starting to settle down after we had a number of interest rate hikes. And so it says to me the market is evening out. Do you want to do condos?
Yeah. So for condos, we had a benchmark price in Greater Victoria. So this is including the core, the West Shore, the Peninsula, and so forth. So a 578,200. That is just slightly up from last month at 575,600, and down slightly from last year, which was 586,900. So that's down 1.5% over last year. The core area, 582,000 for August. That is up from the 578 in last month in July, almost even again with the 583,700 from August of last year. So 0.7% up from last month, 0.3% down over last year. West Shore condos, 534,100 is your typical benchmark condo price versus 542,400 last year. So it's down again. Oh, sorry, last month that is. So down over last month. 568,600 last year. So it's well down over last year. So it's 1.5% down month over month, 6.1% over year. On the peninsula, we have a higher, that's the highest of these that we're going through, benchmark price of 631,500 for this last month of August. That's up from the 621,300 from last month, down still from last year at 659,300. So 1.6% up over last month, 4.2% down over last year.
Yeah, so condos have taken a hit on the West Shore and the Peninsula. And the Peninsula, they have more newer construction condos. So that's interesting to me.
Yeah, so I mean, overall for condos, everything is down over last year to a degree, but everything except for the West Shore is up month over month from the last month. So the West Shore is the one that's sort of bucking the trend of upward in prices. And that's partly because I guess all the new construction. You're shaking your head. What's going on?
What are you talking about?
Looking over at the last two columns.
Yeah.
The percentage change from last month for Greater Victoria is up 0.5% over last month.
Oh, I see. Yeah.
0.7, but the West Shore is down 1.5%.
Yeah, I'm looking at year over year. Yeah. Yeah, those are negligible to me. Yeah.
Yep.
Okay, so row townhouses in Greater Victoria, so all over, 783,700 for the benchmark price for August 2023. That's compared to 785,300 in July and down from 809,500 by 3.2% year over year. The core is at 850,200. That is just down from 852,400 in July of 2023 and 3.1% down year over year at 877,400 last year. And then row townhouses are at 701,900. This is compared to 706,000, or 706,000, sorry. Yeah, in the West Shore for July of 2023. And this is down from the benchmark price of 748,800, 6.3% down year over year, 0.6% down from last month. And then row townhouses, this is like the biggest increase in all the markets, 799,200 benchmark price in August 2023. And I just have a caveat for this, compared to 793,400 in July of 2023, and up from 774,900 in August 2022 by 3.1%. So month over month, we're 0.7%. So interesting. I helped somebody buy a townhouse in Sydney recently. I won't say what street, but we managed to get quite a good deal. There's several townhouses that have just been sitting on the market, some original, some resale. And so there's a deal to be had there because there's a bit of a lull.
Okay. Did you buy resale or from the developer?
We were going to buy it from the developer, and then a resale one came up and we got a better deal.
Okay. All right.
Unoccupied too.
Yes. Interesting. Okay.
Yeah. So tell me what your needs and wants are, my darling.
Yeah. Looking for a higher end condo in the downtown Victoria area, something like the Reef or one of those kind of larger unit over, I'd say 1,200 square feet, but still under $1 million, probably. I'm looking for I've mentioned this before, we're looking for a single family home for 4 bedrooms, 3 baths, I'd say at least, could be more. Oak Bay area would be great, under 2.2 million. Got people under contract for a number of other things. I'm definitely looking for a condo in the West Shore, 1 bedroom, or 1 bedroom in den, possibly 2 bedrooms under 525. And we've seen everything on market. We're kind of waiting for the next one to come up. We ended up writing an offer. I was so mad. I lost my cool. We ended up writing an offer because we saw a property and he liked it. It was first day on market. Thought about it overnight. We thought about it that night. We wrote an offer that evening. It was very late in the evening before it was actually prepared. So I was submitting it in the next morning. I submitted it in the morning. I got the call right back from the agent saying we just accepted an offer an hour ago. And I had asked to be kept informed of offers, but I asked to be kept in the loop. I didn't let them know we were bringing an offer, but I assumed that we would get a heads up. So I was very, very upset on behalf of, well, myself and my client. But I got some apologies later, and I apologized back because there was some swearing involved, and I don't usually do that. Most people would be shocked to hear.
Yeah.
But it's the second time that happened to me on condos in the West Shore, and it's a balancing act between whether you inform the other agent you're bringing an offer, or you keep the cards close to your chest so that they're not going out and calling around saying, "Hey, I'm thinking we're going to get an offer. You might want to get your clients engaged." And I chose to do it the one way, and it cost my client and myself. So,
Well, I don't disagree with your strategy, but at the same time, I always say to my clients, if you like the property, just write the offer.
yep, yep, yep.
It's hard.
Yeah,
Okay.
and sometimes the first offer takes some time to process, and the next one should be easier.
I showed a property, a townhome actually, and to some people who they've been looking virtually online for a couple of years, but obviously, if it's virtually, they've been coming and visiting, and I've shown them some places like since the middle of COVID, and they finally moved here. And anyway, we went to look at a townhome, and it was the first one that they saw that they really, really liked. But because they're new, they're not buying it because they want to wait and see. And I'm like, the whole reason that I'm here is to tell you that this is a unique property.
Mhm.
And so I would write the offer if you like it. And they're like, well, and then anyway, this is a high knowledge client. They need to do their research before they write the offer. And so they hesitated, and then another offer came in.
Yep. And then that's the bar at which they hold all future listings accountable, and they'll never find it again.
Yeah, it happened when I first got into real estate. I remember the buyer's like, "Oh my God, could it be this easy?"
Mhm.
So he didn't write an offer. And then
Yeah.
6 months later, I'm like, "It wasn't easy."
Lessons learned. Jane and I we're not pushy, but when we've learned that we sometimes have to speak up to our clients and say, just tell them the truth. This is probably going to be gone. That's not being pushy, but there are people who just think that they're trying to be, I don't know, that
Yeah.
agents are trying to sell them anything. And we do recognize we are always looking ourselves as, from curiosity, and we get a sense of what's good deal on the market, and we want our clients to do well. So we get excited on your behalf, folks, and we want to see you do well. We don't want to see you lose out on something that that you're excited about or could really work for you.
A couple of times I've had people say, "You remember that house that you said was perfect for us?"
Yeah.
And we ended up writing on it. It is perfect for us because we sit there and we listen to what you're saying,
Yeah.
and what your needs and wants are, and so we see the ideal home. And so sometimes it's hard for um, the buyer, I guess, to recognize it because it's maybe like
Also,
on.
if you're still just starting to work together, you don't necessarily have the deep rapport, and you may just be, and we don't necessarily know everything about your wants and needs and your deeper, inner secrets. So you may have reasons for not buying whatever is put in front of you, but based on what you tell us, we will give you our advice, and based on what we know, we'll do our
Yeah.
best
Yeah.
and take it from there.
Okay.
We should keep it moving. I've got to get on a call here in a couple minutes.
Okay, I have a new listing. It's gorgeous. The main house is 1,900 square feet. It has an extra studio. It has double car garage and extra storage, and it came on the market this week. You'll see it on my social media, and it is one of those houses I'm like, on just over an acre, and um, I want to buy it myself because it's so beautiful. It's in North Saanich on Sumac 11441 Sumac, and it's priced at 185. We had pre-marketing um, realtor tour go through, and oh my God, everybody loved this place. It was just so well done.
Nice. Yeah, it's always fun when you sell a place that's just so beautiful and you're like, I would live here. I love this place.
Yeah.
You're proud to sell it. You're proud to put your name to it. And we don't always have that option, I mean, we can certainly refuse business, but sometimes we're listing properties that are not in the best of shape because the seller is just not cared for it. And there's only so much you can do.
Yeah, I have another listing. We just reduced the price in Cobble Hill, 546 Cedar Crescent, and that one's just come down from $799 to $749.
Mhm.
And it is right beside the rec center, which some people say, oh, it's too loud. It's not too loud. It's really nice. You actually don't hear anything in the house, and it's right beside. If you're social, you can go hop into the pool during the summer, or
It's like having your very own rec center right beside you. That's
yeah,
amazing.
yeah. So if anybody's interested, let me know. Andrew, since we are near the end, just want to remind everybody we are on Thursday mornings at 9:30. If you wanted to listen to us live and ask us questions, we'd love to hear from you. How do people get in touch with you, my darling?
Reach out. I'm at 250-360-6106. That's 250-360-6106. Email info@andrewplank.com, and check out again the website, andrewplank.com. Instagram is Plank Andrew, just to be different.
Okay. And I just want to say these conversations really reflect who we are as people. Hi, let's go. I gotta go. I got a call to make. My name's Jane Johnston. I'm with the Briar Hill Group at Remax Camosun. My email is briarhillgroup@gmail.com. You can watch these videos and more at victoriarealestateshow.com. And you can follow me on Instagram at realtyteacher_Remax_Victoria. So have a great week. I'm projecting a steady end to the year.
I think it's going to be a busy September and then sort of slow down, I guess, to the winter, and we will see what the spring brings. It really depends on so many things. So I'm not going to try to go into the spring yet. But anyway, thanks everyone for watching, either now or in the future. And remember to reach out. We'd love to hear your feedback and comments. And Jane, you have a wonderful week.
Yeah, take care, everybody. See you next Thursday at 9:30.
Everybody, bye.